And welcome to The Bottom Line, where we break down some of the main business and economic stories of the day. We may not be aware of it, and we certainly don't think about it often, but crude oil and its price impacts us a lot. It's one of the most important commodities in the world and makes up approximately 3% of global GDP. It is directly or indirectly involved in the production of pretty much everything we use. But to tell us more about the current situation on the oil market, I am joined by Piotr Przybyło, energy expert and resident fellow from the Casimir Pulaski Foundation, joining us directly from the Warsaw Security Forum. Hello, and thank you very much for joining us today.
Pleasure to be here. Thank you.
So Wednesday sees an increase in oil prices after Iran's ballistic missile attacks on Israel. And generally, we see this volatile situation in the Middle East. Can you give us your comments and your insight as to what we can see in the coming weeks and months in terms of the oil prices in the global market in general?
Absolutely. The situation with oil is extremely volatile. And after this sort of situation with Iran and Israel, we can already see the increase of oil prices by, let's say, 4 to 5%. For Brent is 4%. And I think very important is to sort of see how the situation evolves. If, for example, Israel retaliate that sort of attack, we're going to see a certain sort of measure, probably, or obviously assuming, from Iran's side. Let's sort of not forget that Iran is sort of located in a very strategic position. You know, we have Strait of Hormuz, which sort of Iran can control if it wants to, and during that sort of, you know, the very strategic sort of point, there is around 20 to 30% of oil sort of, you know, supplies, passes, you know, the daily. Mm-hmm. So we can imagine, you know, the potential retaliation from Iran's side, you know, would cause a major sort of shock to the oil, sort of, you know, the supplies, oil markets and prices if that sort of situation occurs, right? So we're in a very sort of volatile and risky situation at the moment.
So the overall trend that we observe is that there is lower demand for crude oil, and media generally analyze that, they comment on that, and that's been ascribed to weaker Chinese demand. But in the long term, the demand for oil is actually on the up. And if I'm correct, we're looking at approximately 104.6 million barrels per day. That is the estimate for 2025, according to the Energy Information Administration. So what we're actually looking at is this dynamic that is going up and down, and mostly it's been going down for a little bit, but overall we're going up. And I wanted to ask you if you could just tell us a little bit about this differing dynamic and the factors that are behind that.
I think it really depends on sort of, you know, what type of sort of traders and analytics sort of we are talking about here. If we are talking sort of daily changes, so obviously, you know, we have some sort of, you know, fluctuations, but what I can see is a very sort of stable sort of level of oil production or demand and supply worldwide around that sort of, you know, the 100 level. And indeed, globally, there are certain regions where sort of, you know, that demand for oil is going to be sort of decreasing. For example, obviously, you know, Europe, which sort of in terms of the oil profile is the only region in the world where sort of, you know, demand for fossil fuels is decreasing. That's something, you know, I think important to notice. By other regions, there's a sort of, you know, the very sort of, you know, the stable increase of oil demand, and that's sort of, you know, exactly what you mentioned. You know, the future globally in the long term is not going to be sort of different. Yeah? So we're not talking about sort of decreasing the production, but maintaining it stable. And Iran plays a significant sort of role in that sort of, you know, the supply of oil, providing approximately 5% of the sort of global supply. So important aspect of sort of impacting on the sort of oil prices globally.
So do you think that prices will stabilize at approximately $80 a barrel?
This is, so we are around sort of 75 at the moment right now. Well, as I mentioned earlier, you know, depends on sort of, you know, the situation in the Middle East, but long term, and I'm talking about sort of, you know, the yearly sort of predictions, that's the level more or less when probably the sort of the prices are going to stabilize.
Okay, so we're at the moment we're looking at OPEC Plus meeting, and obviously the outcome of that, there are probably about two outcomes that are probably realistic. And the Financial Times reports, obviously, that Riyadh is afraid to lose its market share and wants to pump more, but obviously there are producers that are also looking to get a little bit of that market share. What can we expect to see come out of that meeting?
Well, who knows what sort of is in the heads of the decision makers from the OPEC Plus. I'm frankly speaking, I don't know. We can sort of assess that obviously the Saudi Arabia is going to be sort of thinking about maintaining sort of their sort of revenue coming from the very stable supplies of and production. They are not sort of looking into sort of decreasing that. But let's sort of think about this, that this is sort of a very global sort of the mechanism sort of setting oil prices, and it's not only OPEC Plus. We have the sort of states, the major producer, which also sort of that plays important role into sort of the setting the sort of the global oil prices. So it's I would say it's not really what sort of the OPEC Plus sort of is going to decide about it. It's more about what sort of the response from US is going to be to those sort of production rates.
Do you think that there are any other major players that can replace those that are in control at OPEC Plus at the moment?
No, of course not. But it's not sort of sometimes the small changes in the sort of supply and demand may sort of affect the prices, and that was what I was referring to.
Okay. I want to move to Central and Eastern Europe, because obviously the energy focus, almost in a literal sense, is all about energy diversification and increasing energy independence, obviously away from Russia. But Hungary and Slovakia are the tricky players. They're still hooked on Russian oil. What is your take on that? What can we expect to see in the next year or so?
So that's important. So the plans are within the next 1 or 2 years. And that was sort of agreement from the very beginning when the sort of sanction on the fossil fuels from Russia were imposed. It's a very important aspect of that sort of why those countries sort of still obtain those supplies from Russia. It's a technical aspect sort of their refineries. So it's a technological sort of aspect. Their sort of refineries cannot sort of produce those sort of products based on any different type of oil, but the Russian one. So that's why they are basically sort of hooked to that. But once sort of certain technological improvements sort of is going to happen on those sort of within this infrastructure, then we can see about sort of seizing that sort of supply from Russia. So it's coming, it's planned. It's just we need to be a little bit more patient in that. So it's not because they want, it's because they have to.
It's not a lack of good intentions.
Absolutely not. Yeah.
Okay.
So let's be fair about it.
Okay. And then obviously there's that controversial issue of these shadow fleets.
Yeah.
That's been actually discussed quite broadly, and that actually gives Russia a lot of influence when it comes to the global oil market. How do we actually deal with these shadow fleets? Is this a matter of sanctioning these vessels one by one, or is it a matter of a blanket solution? How do we deal with them? Like literally, how do we logistically, settle the issue of these shadow fleets?
That's a really good question. If I had known the answer, I would probably
do it yourself.
Propose it myself, yes. It's a thing that we need to deal with. There's certain sort of proposals, especially from the European Union, which is sort of being affected. Even that the sanctions are in place, we are still sort of obtaining quite significant numbers of fossil fuels and oil from Russia. So we need to sort of think a little bit more globally how we can sort of tackle that problem. That sort of shadow fleet that you mentioned is operating in the international waters, so there's not sort of really a law enforcement that we can sort of do that. It would have to be on a sort of more global level. So, but indeed, it's a big problem, and needs to be taken care of.
So, is it more of a legal issue or a logistical issue?
Well. So this is not a logistical issue. This is sort of logistical issue in terms of sort of Russia and China sort of cooperating and providing that sort of supplies. It's a more legal issue because it operates outside of the sort of the legal aspects of, for example, European Union. It's just offshore Portugal, but not on the sort of Portugal national waters. It's sort of just on the other side of the border. Mm-hmm. But let's not forget one thing. In terms of stabilizing, for example, oil prices, I don't know if this sort of, maybe an interesting fact. when Russia sort of stopped providing that sort of supplies to European Union, it was actually American Biden sort of the governance that convinced India to take over those sort of supplies in order to stabilize oil prices globally. So you can see that there are certain players which might sort of not be exactly on the side that we think that they are.
Mm-hmm. Okay, as we wrap up, just very briefly, Mario Draghi's report, something that everybody has been discussing. This joint supply of commodities, among them energy resources, seen as a priority of lowering Europe's energy bill. Do you see this idea of countries buying oil, gas together? Is this a realistic vision? Is it possible? How do we go about it?
Paradoxically, this is not the first time that those changes has been proposed. Just nearly a decade ago, the first similar report has been sort of proposed, but not sort of executed, right? And unfortunately, sort of this is my personal opinion, obviously. I think it's a little bit too late. We are very reactive to the situation. We should have acted, a long time ago when, as I mentioned, the first report sort of came. I don't know. Let's hope. I mean, it's better than doing it late than not doing it at all. But we are way behind, sort of in terms of sort of what Draghi says in his report, innovation and sort of competitive advantages that us as Europe sort of we are losing in terms of sort of competition with China and the US. So. Yeah, well, let's see.
Let's do something, basically. Okay, Piotr Przybyło, thanks so much for joining us.
Thank you, my pleasure.
And that was Piotr Przybyło, energy expert and resident fellow from the Casimir Pulaski Foundation. Thanks so much for joining us on The Bottom Line on Business Arena. I was your host, Marie Cato. Join us on Thursday at 5 p.m. CET on TVP World. And for the latest regional business stories, check us out on X and on tvpworld.com. Coming up next, World Talks. Goodbye.